rather this session for tonight. So a quick one, just some house rules. Number one, we'll have opportunity to ask questions, and of course, intermittently, in case you have any question that you would like me to give a response to, feel free to drop it on the comment section. Another thing is that this session is on record, so most definitely you're going to get uh, a recap from what we have discussed tonight. And in case anything is not clearer, of course, we have our communication channels that you can actually use to, get to, find out more where you have, a little bit of, concern or issue that might not have come out so clearly. So just to further to that, a part of me, part of my training background, I've been able to train across. So combined experience of close to 12 to 13 years. I also lecture in institutions of public institutions here and there, as well as other institutions. So that is just a brief background to who Samuel is. Collectively approved through our National Industrial Training Board, that is called NITA, as a trainer for this. Yeah, so basically that is a brief background about Samuel. So you get to know Samuel more as we continue to engage. So I don't want my brief introduction, to cloud, the business of the day. So the business of the day, of course, is a focus on our topic of study, with respect to why we're here. So that is just the bit about myself. So thank you again for taking your precious minutes to join the call. So I think I will begin uh, by just giving a brief background to why the course and what it is. Of course, we have a lot of questions that individuals will normally will ask. So when you're doing practical accounting, people summarize it as computerized accounting. We generally, what is the purpose? What is the end game? Yeah. So tonight I'll be sharing on the subject from reports to decisions, and this basically looks at how can we critically analyze financial statements like professionals. Of course, we have diverse areas that a lot of this information has not been unraveled to individuals just to have and clear understanding of what it is. When we go through the accounting process, we know, the procedures of journaling, record keeping, but are you in a position when you review the report, are you best placed to be able to, you know, give a light of or an overall comment on what is the stature of the institution, what are the indicators, and therefore we'll try to diverse this subject area just to better understand what is the sole purpose of this, and why is it very very important for professions who are doing accounting, and then of course those who are also doing a little bit of finance. So there's the blended from both, because finance is not independent of accounting, accounting is not independent of finance. So both are joined at the hip, and they have to work in unison. So the finance aspect, because we try to define what is finance, and if you try to get the general definition of finance versus accounting from what I was taught back, uh, finance is, just to give it a perspective, when you have gathered the entire process, this basically means doing the journaling, the recording, you have that bit. Now, on the other hand, there is the output that we generate, right? And this is what we're now referring to as the financial statement. So we will want to jump into a greater diverse discussion on why is it important, why is it essential, from both angles, from academia as well as from industry experience, given the fact that we are privileged to have a mix and match, because this is what we cover. Now, just to give you a bit of what it is, when you look at accounting, is the recording and reporting, which basically looks at one, of course, how we are tracking, how we are recording, how we are reporting financial transactions. Like I said, either cannot survive on its own. On the other hand, when you have finance, we are looking at the decision making aspect. Yeah, we want to use financial data to make decisions and plan for the future. So, what are some of these critical decisions that one can ideally make? For example, of course, when you ask a question, where do we put money? That is an investment decision. Uh, what are some of the avenues that we can choose to finance in this business? So we have financing decisions. We want to have an overview lookup of what the business will look 5 years from now. We have budgeting and forecasting. And then the last one, of course, we'll touch on aspects to touch on risk. How can we cushion ourselves against certain exposures that are coming from, the diverse business environments that institutions will always be operating from. So that is in a nutshell a scope of why this is very, very important. So I hope that just tries to uh, diffuse what it is, right? Now, every person can prepare financial information, as I've given uh, a comment on that. But when you're asking the question, how many of us are able to explain what those numbers mean? So as an accountant from where you're sitting, or a CFO, for example, just to give a perspective of a bigger institution, your pay is touched on your capacity to be able to make decisions and not just to generate financial information. Now, the generation of financial information is what we define, in the simplest term as, the accounting, which is the day-to-day recording of daily transaction. If you have sales, you have purchases, if you have expenses, that is generally what you're doing. You're also creating reports. We have income statement, we have the balance sheet, we have the cash flow, and more or less, you'll be looking to ensure that there's accuracy and compliance. This, of course, will be touching on the aspect to do with tax as well as audit. Now, that is the general scope of what accounting looks in the past and in the present. Nothing so much has really changed. But when we bring the discussion that how can we use the financial information to be able to make decisions, then there are certain indicators as a professional from where you sit, that if I look at X or a certain indicator in a financial data that has been provided, then I'm able to flag out something out of it. Yeah. So finance will give you a better understanding of how you can make certain decisions. For example, should we buy or should we lease? You know, if I run a given analysis, is it going to generate returns for the business? What are some of the funding options? So generally, at that capacity, you can actually see that the bigger picture is what to do. So you are coming in at a capacity to make an advice, the business or the institution on critical aspects that touch on the business. Now, a quick reality check. We're saying reports are prepared. We have numbers because accounting is similarly just recording transactions which are translated to numerical figures. But where we have the biggest of the gap is the decision making is very, very weak because one, uh, how do you use these numbers to make a decision? Now, I say that these two cannot work independently. By this, I mean without accounting, finance has no reliable data. Without finance, accounting data isn't fully utilized. What does that mean? So the analogy around this is one, of course, we are now finding out that accounting is a storekeeper, or rather, where we are record keeping. And then you have finance, which outrightly touches on what are some of the decisions that we need to make next. And there is where we have a bigger gap. We have a bigger gap at that dimension because we need to understand how do we analyze this information for betterment of the institution, and of course looking at the future in terms of how we're going to make certain decisions to make them worthwhile or not worthwhile. So that is the reality check that generally this training should be able to uh, you know, uh, you know, uh, you know, impact you in sort of way. Now, what is objective? As I've expanded and I'll continue to expand, we're saying we want to further interpret financial statements, we want to further understand what is performance, and of course, at the end of it all, we want to make informed decision. And of course, the process starts primarily by doing the basic journaling. So I'm journaling where I'm putting the financial transactions, which is as a result of the financial events. Then I need to better understand the output, which is the report from the overview that I get, what does this data present to me? Why is it essential? Why is it important? And therefore, at that juncture, I am better equipped to make informed decisions that will have a greater financial implication to the business. So these are the summary of the objectives of why is it essential and why it is very very vital for you not only just to stop at accounting, but rather, utilize the financial information for decision making. I'll keep making reference to how these two work together, accounting and finance, because I've said each is an embodiment of the other and neither survives alone, right? So accounting gives us the data, yeah, which is basically capturing every event of the business. And then finance, on the other hand, when we talk about the financial statement, now there is where finance comes in. So the financial statement is the data that we get in. The financial aspect now is the process of processing this financial information for decision making. And therefore, both of them, as I mentioned before, that they are joined at the hip, and each depends on the other for the next step, of action. The way you walk, if you take, how you walk. Uh, if your hip and you have a problem with your hip, or rather the hip bone is not well connected to, I think the vertebra, which is the spinal cord, generally you cripple and you're not able to make that movement. Similarly, the two have that shared, a sort of interdependence on each other. They're very dependent on each other. None is interdependent or independent, rather. Both of them will rely on the other one to be able to fulfill each of the need. Now, how are we coming in to address the skill gap? I know everybody has the capacity to understand accounting. Our struggle is, on the interpretation bit part of it, and the larger picture is how do we come up with, the decision making aspects. Now, of course, it will go back to our understanding of all these processes. We have financial information, we have data, we have processed this information through the correct procedures. This is aligning to one, the international accounting standards that we know, that is IS statutes. You have the disclosures, which will touch on the generation of the financial information. This is the IFRS standards. And of course, we are saying that we have a knowledge of how these two work. So the question is, at the end, what is the purpose, right? What is the purpose of me having this financial information? Am I able to look at indicators that point to certain weakness of the business? Are you better placed to advise the business to cut on certain cost elements? Because when CEOs are going to make certain decisions, they rely heavily on comments and advice from the CFOs, because the CFO have a greater overview of the business in terms of the numbers and the data, and therefore they are able to extract information and analyze and get better metrics that are indicators of how the business is doing, and therefore they're able to advise. I think we can cut cost on this, and that's why you see when institutions are doing restructuring, generally it is tied to the cost element. So they have the numbers, they've run the numbers, they've looked at the feasibility. I think if we continue operating in this manner, we might not be able to survive in the next 3 or 4 or 5 years. So we need to do something. So are you better placed to give that advice? So that is a skill gap that the training aims to address at the end of it all. So I hope we are coming together. Now, for those of us who are running their independent business, or for those of us who work for different employees or employers, we know what they think, right? Of course, you have analytical thinking, where your bosses try to imagine that you're reasoning like an analyst, right? And therefore you need to be, when you see numbers, you are able to explain what the numbers mean. By this I mean, uh, just trying to further digress, uh, I have numbers, and therefore I'm trying to use certain indicators, key indicators within the numbers, using certain frameworks that allow me to uh, have a breakdown of this information by evaluating it and trying to come up with a logical decision or conclusion that makes sense. Generally, that I think I want to believe that is analytical thinking. Now, one, I'm trying to identify a problem. I have data. Okay. So somebody has this data but lacks the understanding of how this data is useful. So your capacity, or rather what the employer expects from you, is that you can look and identify a problem given the financial information. You're able to break it further to smaller parts, and then you're able to look at patterns or trends or relationships amongst the data that point out to a certain deficiency or strength within the business. And therefore, you're able to draw conclusions and therefore help the business to make decisions. That is what you're calling analytical thinking. Of course, it's paired with what you call critical thinking, because critical thinking looks at, are you questioning certain assumptions about how we're doing things or how you want to do things that are reflective of whether you're trying to solve certain problems. And then you have decision making. Generally, this is trying to use logical reasoning paired with analytical thinking, which generally looks at the breakdown of this information and coming up with a conclusion that we can take up this option. That is decision making. Problem solving, of course, we know is trying to find workable solutions. Now, the business is constrained in this manner. I've looked at the cost elements from the data that we have. We have looked at the cash flow statement, for instance. We've looked at where money is moving out. We've looked at the inflows, and we've seen there's a tap that is broken somewhere. And therefore, you're coming in by providing solutions that will help the business. That is problem solving. Now, how can you solve a problem without the understanding? So by this, it means that you need to be better equipped on the term we call data interpretation. So data interpretation is does not mean or merely just looking at the numbers, but rather understanding what the numbers say, looking at the trends, and further understanding what the report says. This basically means that you're critical and you're paying attention to details, you're spotting errors and any inconsistency within the financial reports. And you can use that to give workable solutions that the business can adopt to improve on different dimensions. And of course, we all know that the critical aspect about every business is sustaining the financial health that every business does require. Now, let's take a case. Imagine you have a business and your profits have dropped. Now, from this, I want to take it and approach it from an analytical thinking perspective. So, as I was saying, we're looking at this scenario. You have a business, your profits are dropping, and I just want to look at if I am an analytical thinker, because that is the expectation of the employer. So my employer expects me to check the financial statements, and then I need to do a contrast comparison, or I need to do a comparison of, let's say, for example, last month and this month. Okay, and then out of that, I am required to identify changes. For example, in what area did we experience higher expenses, or in what area are we not being able to meet the target itself? And then from that, I am supposed to ask a question, why? Now, the question that I'm asking, why, for example, number one, if my expenses have increased, does then this translate to a price increase? Secondly, if I have low sales, does then this translate to low demand, right? And therefore, from my analytical aspect, as an analytical thinker, what will be my recommended action? Are we going to cut cost? Are we going to adjust the price? or are we going to improve the marketing so that we can have a wider reach to our clients, and therefore we can boost the sales? Or can we push an ad on adjusted prices, giving discounts so that maybe the sales can go up? Or alternatively, if it was an expense issue, on what area can we minimize on the cost? All right. And therefore, if we are offering certain services, then we can uh, put it at a certain threshold that if this is met, then we can offer this as an alternative service. And therefore, that gives you that perspective of what your employer thinks about you, right? And that is the expectation. So if you have not built this capacity, then definitely, of course, time will catch up with you at some point, and everything is getting automated. So we need to move fast enough to ensure that as technology is coming in, we are not easy to be replaced, because the reality is sooner or later it's going to catch up with us. So are we upskilling? Are we building capacity or at an individual level to be able to align with what is changing out here? So I hope we are getting closer to the objective. So when you look at the three things that you're seeing on the screen, you have the income statement, you have the balance sheet, you have the cash flow. We generally know the purpose of either. The income discloses the profitability of the business. The balance sheet tells us, if we were to look at our investment in terms of assets and liabilities, what is our state? The cash flow tells us where money is going to, right? And of course, we can channel that through different activities of the business, from financing, investing, as well as the operational aspects of the business. So each of these financial information acts as an indicator pointing to something. So at the end of the process, which is the practical accounting bit of it, when you record the information, you have generated financial information. Now, are you able to tell us what it means? Right? And then we have said we are reasoning from the employee's perspective. They want you to think, they want you to offer solutions, they want you to be logical in terms of how you're evaluating things. Yeah. And therefore, if you're not offering any of that, definitely, you will be rendered redundant. So just to expand on a few pieces of the income statement, because I want to believe from where we sit, we know, as I've mentioned, that the income statement will always point to the aspect of the profitability of the business, and therefore they give the view of what the business has been able to generate in terms of the revenue, what are the expenses, what is our margin of profit, and is the business making money or not? That is the income statement. That is what it discloses to the business. On the other side, we have the balance sheet, right? So the balance sheet acts as the financial health measure. It's like the thermometer. Yeah. So when we want to check on the stability of the business, of course, we'll be able to run a number of financial ratios, but the balance sheet gives us a general view of our assets and liabilities. So if I'm to get to know whether this business, will is not gonna face solvency or insolvency problems, then generally I'm looking at what is the asset base, and then I compare that against equity and liabilities. I am able to run certain financial ratios that will tell me whether this business is sustainable or stable. So quick ratio will help you do that. Asset test ratio will help you do that. Amongst other financial ratios, of course, we look at that at a broader perspective when we roll out our discussions around that. So we just, in a nutshell, just having a glimpse of what is there. And the other one is the cash flow statement, right? So when you look at the cash flow statement, what does it tell you? Yeah, you're able to see money moving from this juncture. It's entering on this given activity. So if I'm trying to track cash so that I can know where we have greater utilities of cash, what is the purpose of this financial statement? Now, most people, when they're running their businesses, I think one of the most important questions that they don't understand is where, or rather, does the business actually have cash to operate? Because the business might not be making losses, there's money, but are you able to track where this money is at? Are you able to track where money is moving to, right? So the key aspect about the cash flow is to track cash movement, right? So you have cash coming in, and of course, in most cases, we'll say receipts from customers. You have loans, you have investments, then you have cash going out. So I'm either paying salaries, I'm having expenses, I am acquiring items. The other thing is, and this is a very important financial statement, yeah, and most people don't know how to interpret it. Even in most cases, even with if we remove automation, allow me to say this because I also teach accounting as well as finance, and some of my degree students that I teach really struggle with this statement. I don't know what normally is the problem. So I want to also imagine, even at a higher capacity, if you did accounting some years back and was to give information and was to tell you extract a cash flow statement, I'm 100% sure 90 or 95% are going to have a problem with preparing this one. So the accounting system has sort of made it a little bit easier for us, right? Because most of we, the persons, of the people, we are not so sure if we're able to pinpoint exact activities within the business where cash is utilized in different ways. So in addition to that, the cash flow statement can also give a perspective of liquidity of the business, right? Uh, for example, when we look at the operating activities, we want to see, are we able to pay certain bills? Are we paying some salaries here and there? Are we settling some short-term obligations? In general terms, what in layman language or in finance and accounting we call, can the business survive day to day? You know, and last but not least, because there's so many pointers that we can discuss around this, because and of course you can see I'm putting a lot of emphasis on this one because I think and I have a feeling that is normally underutilized in most cases, because most people do not know what to interpret out of it, and therefore that makes it like most people don't want to really rely on this one, but it's one of the very vital financial statements that we actually generate from the financial activities. Uh, when you're making a certain decisions, for example, if you're looking at the budget, right, and you want to maybe cut on spending, a cash flow can give you certain indications and it can support you on that frontier. And that's something I'm mentioning, that most people do not really understand how essential this is. And the last one, so that I move on the next pointer, is if I want to evaluate the financial health, of course, I know the balance sheet can tell me some certain indicators, but there are certain elements that might feature on this one that are not featuring in the other one. But or you could feature, but do you have the eye of view just to distinguish that? I think that activity is pointing to something, right? Because the cash flow statement is prepared on activity basis. If you look at the indirect method of preparing a cash flow, so you have the operating activities, then you get your cash for that. You have financing activities, you have your cash for that, then you have your investing activities. This should give me the cash that matches my cash book, which also matches the cash that I have in the bank. And therefore, putting that all together, I'm able to look at the overall financial health of the business. And therefore, investors and most of stakeholders rely on this tool to check the stability of the business, and they can try to look at the risk aspect and look at the overall bigger picture, which is sustainability. That is cash flow. You know, so we'll continue to pinpoint many factors later on as we jump and delve into the greater discussions. But just before we proceed, what I am unraveling is bit part of what we know, or you could know, or you could have heard, but at what capacity did you further maybe dig deep to want to find out more? And therefore we're asking ourselves, why does analysis matter? Yeah, why is it critical? We will go through the process of getting this information, preparing this information, but the end game is we need to come up with a decision, and why is it very, very important? So in layman's language, as it sounds, numbers alone are not very, very important, and some people may say they are useless. I'm just trying to be very reserved on that comment because it could be looked from a different perspective altogether. And then the other thing is insight driven decisions. Yeah. So we have amplifier tools that allow us to have insights. So when you say you want to have an insight that will drive a decision, then it goes back to the things you mentioned. Are you do you have logical reasoning, right? Do you have an eye for identifying a problem, right? That then all these factors are put together to better make a certain decision. Are you able to? Are you good with data interpretation? All right, and of course, we are not talking about data in the statistical aspect, rather, but we are talking about the numbers from the accounting that tells us and point to a certain trend, yeah, from the reports we've generated. So we need to then attach the logical reasoning, your attention to details, spotting errors, finding workable solutions to drive decision. So all that is what we're calling insights. I'm able to have a deep dive, uh, using different metrics of analysis, because analysis is very wide. And of course, we'll be looking at what are some of the ways we can try to analyze this financial information so that we can better improve certain decisions. Please remember, it is not only by sight, but it is also by mind. It is not only by sight, but also by mind. That will mean that there is a deeper to the overview of our just looking at numbers to getting to the reality, which is being able to make a certain decision, or rather find a workable solution. Therefore, you're trying to solve a problem, or you're trying to drive change, which of course will have an implication on the decision that you're going to make. And there we are saying analysis is very, very important and it matters a lot. So I hope it's getting simpler. I don't know if it's getting simpler, which I'm just trying to break it down to its simplest form. Yeah, from where I sit. Now, I don't know if there's any question. And of course, we said if you have any burning question, you can
I
post.
have a question.
Please go ahead.
Yeah, thank you so much, Samuel,
You're most welcome.
for giving us a detailed introduction of this course. And indeed, the two things are jointly used together, the finance and accounting.
Yes.
But then what confuses me somewhere here before you proceed
Yes.
is you've mentioned the income statement.
Yes.
You've also mentioned the balance sheet,
Yes.
and you've also mentioned the cash flow.
Yeah.
Now, these three items are typically used in a business setting.
Yes.
But now let's try to see how can we narrow this to the NGO financing, where they mainly deal with income and expenditures.
Mhm.
So how can these three be applied there?
Perfect question. Perfect question. I think I was really looking for that. Because when you look at the NGO, because maybe it could have been swallowed up in the discussion. So when you look at the NGOs per se, for NGOs, they're not supposed to report profits. I think they report in terms of a surplus and that, right? So we have
Yeah.
NGO-like financial statement that are gonna mirror what we are having a discussion around here. Take a case for instance. Uh, NGOs, of course, they will also prepare a statement that looks like uh, an income statement, and some people will call this statement of financial activities. So it mirrors what we call the income statement. The cash flow is a cash flow, regardless of whether you're in maybe in the NGO sector, or you're on this another sector. And then for them, of course, they rely heavily on the statement of financial position, of course, where they look at what are the donations, what are the subscriptions, and of course, if we've channel funds, to different avenues. How do we then report? Because the purpose of their reporting is just to give the picture of the status of the NGO, rather, not for tax purposes. So for them, income will be treated as a donation, whether it was a grant, right? The expenses, of course, are going to maybe mirror what we do on the other business side. Maybe they could have salaries, maybe rent or program cost for rolling out certain programs. Just to try to get a perspective of all that. If we try to look at the cash flow statement, because they sort of mirror each other. It's just the presentation and the sources of where this financing are coming from. For example, when you look at the cash flow statement, for them, they're still going to have operating activities, but they're not in. You're not really investing. You're investing in programs, right? So then the funding for NGOs will be categorized maybe into two. Number one, I don't know if this is the case from where you are. Yeah, we have what we call restricted funds as well as unrestricted funds. Now, when donations come and grants come, you have those ones that are categorized under restricted funds, which basically means they must be used for specific projects, and therefore these monies cannot be channeled to other avenues. For example, if you receive a donor fund for education program, then ideally that has to meet that objective of the education program. I think we are on the correct path. Then you have unrestricted funds. This one, of course, they could be also used for general business operations. And you see, at the end of the day, we still require you to give a disclosure of how the NGO is. So we know the motive is not for profit, but you have to disclose. Do you have a surplus that is there, or do you have a deficit, right? And of course, when you look at how you run the business, NGOs are more dependent on fund accounting because you are relying on grants and funding that is coming in, whether it's restricted or unrestricted. On the other side of the business, we call that capital. On NGO, they call it fund accounting. Uh, in businesses, we report sales revenue. For NGOs, you report donations and grants. It's just the terminology that is a little bit different, but naturally, of course, even the operation the expenses you incur similarly, might also try to mirror what happens on business that are supposed to be making profits. So I don't know if that tries to give just a picture of the two that we can coagulate and see that we are moving in the same direction. It's just that the reporting is different and the intended purpose of the reporting as well, because one is reporting for tax purposes and the other one, of course, tax purposes, this is, of course, including profit. The other one, the objective is to disclose, did you make a surplus or do you have a deficit, so that maybe you can reach out to donors to increase funding, right? The other one, of course, we want to ensure we are getting our sales revenues correct, so that we can be able to get a higher profit margin. So that for me is maybe a slightest of the difference between an NGO as well as normal businesses. So I don't know from where you sit. I don't know if we are on the correct trajectory of have responded to your question. I want to know if you're together.
Thank you. I think I got what you're saying.
Yeah.
Thank you so much.
Perfect. Thank you. Thank you. Thank you so much. I was just trying to get that so that it can be quite clear. It can be quite clear on both sides. So both will do the analysis. Don't get this wrong. Both will do the analysis. It's just that the purpose is different. The purpose is different. The purpose is different. Now, on the subject, simple analysis, right? And of course, here's where now that question came in. Is the profit growing at cost control, and is cash stable? Similarly, even for NGO, when we run the analysis, we're not supposed to see, we're not saying maybe, if the profit is growing, but rather we'll look at, do we have a surplus? Is our surplus, because NGOs will always want to have, bigger surplus margins, that of course ensures that there's sustainability, with that institution, for lack of a better word. For businesses, of course, we're going to look at the sales revenue. Our margins increasing? Are we handling costs better? And do we need to cut on cost? And do we have cash at our disposal that we can be able to utilize for other purposes? So that is, the what I'll maybe just say, in simple, looking at the other side of the NGO as well as the other side of the business per se, the business per se. So I hope that shares a perspective of how both of these could be used for the same purpose. Yeah, so the same purpose is the analysis of making decisions, but tied to that is understanding the procedures as well as the processes. Now, for simple analysis, we could use certain key indicators that will help us to tell whether the business is doing well or not. In most cases, of course, we rely on financial ratios. We have quite a number of financial ratios. The last time I checked, we have a total close to 78 of them. Some of them can be broken down to what we call different financial models, where we use different Z scores, and each of these Z scores are used to measure different aspects about the business. From the strength of the business, I trying to identify the distress levels of the business elements. But in brief, when we talk about ratios, they are tied to financial statements. Yeah, so we call it financial statement analysis, where we rely on using different metrics of financial ratios, which generally give us a perspective of how the finance of the business are in terms of the performance. And tied to that, you also have what you call the financial health. So we'll do a comparison using the figures to try to evaluate profitability. If we want to measure efficiency, or what is our turnover ratios. When you look about liquidity, do we have the capacity within the business to meet short-term obligations in terms of paying debt, right? We have ratios that touch on risk and solvency, right? Is the business facing solvency? And in the 21st century, we're looking at it. The business are really struggling. Businesses are really struggling, and what is the problem? So financial ratios can assist to try to highlight some of these challenges from the basic. Yeah, from the basic. You use comparisons. Ratios are not absolute figures, right? So we use them over time. So they best work when you want to do a trend analysis. They best work in cases where you want to do a comparison. Of course, this could be industry based. Like for example, I want to do a benchmarking, and from the benchmarking, I want to do a counter comparison with how other competitors are also performing, right? And therefore, that assists you to be able to meet that objective. Uh, what I can tell you for sure is that when we are analyzing the business, we cannot only rely on financial ratios. We have to onboard other metrics of analysis as well. And if you've had me mentioning, the term model. Yeah, to model is to create a model to measure deeper aspects using weighted averages of different measures. It could be combined ratios that will give us certain clear indicators about how the business is performing. So if you just do the profitability ratio alone, you may not be able maybe to get certain elements. Maybe we made our sales revenue was high, and tied to that, we had also high expenses, and therefore, yes, the business was profitable. But when it comes to the elements tied to cost, you're not able to pinpoint based on some of these critical ratios. So there are certain other elements that can be joined together to further strengthen the capacity of using ratios to evaluate the performance of the business. But what is the end game? You know, what is the end game? Does high profit mean that your cash portfolio is strong? And we have businesses where they have greater liquidity, but when we look at their asset base and those other elements, we have a problem. So what points to healthy businesses? So these are part of the questions that when you run the financial analysis, it tries to answer. So for you to determine if a business is healthier, for example, I could use the solvency ratios. This basically will try to look at the long-term stability of the business. So, for example, if the business is financed through equity and debt, I may want to run the debt to equity ratio just to pinpoint, that. I'll also run maybe the interest coverage ratio to see if we have interest, how fast are we, do we have profits that are able to meet the interest obligation of the business, just to categorize the business as healthy. Otherwise, of course, the business runs the risk of, going solvent in the wrong run. So those are some of the indicators that could pinpoint to either of the elements. So we will be able to expand on that as we engage further into the discussion. I'm just going to give an overview as well as a breakdown on the needs of building capacity for as well as having the skills that are aligned to help make certain decisions that are tied to the business. Now, what are some of the common mistakes we make? We have to look at both sides. So we can't just put the message, you need to do analysis, but we are forgetting to say if you do the analysis wrong, then you may not get the end results, right? So what are some of the common mistakes? Most people will always focus on profitability. Some will ignore cash, and we're saying some are not going to do the analysis. And then just to add on this, I mentioned the fact that if you're doing a comparison analysis, for example, I cannot compare telecom industry and manufacturing industry. They have different yardsticks, different standards, and even their market beaters are not the same, right? So it generally doesn't make sense, right? Uh, just to touch on the mistakes that we find ourselves making. Uh, that is also tied to some of the limitations as well. Like for example, focusing on one thing could be misleading if you focus on it alone. Like for example, if you focus on profit alone, it could mislead you because you can't use that as the measure alone. We have other indicators. Are you using the other indicators as well to try to evaluate whether this business is sustainable in the long run? Otherwise, then it doesn't meet the purpose. It doesn't meet the objective as a whole. Yeah. So these are some of the challenges that we make, and therefore, so we want to try to see when you're building this capacity, are you able to have the correct method of discernment? Yeah. Are you able to identify some of those shortcomings so that you can improve this for the better? Now, the workplace reality. When we teach, there's the teaching, then there's the actual when you're practicing. Yeah. And those two, most of the time, they're always on a collision course. I don't know why. Because you see, the theory will always give you, different stories. So when you get to the workplace, things are a little bit different. The procedures have not changed. It's just that you're trying now to get the induced theory that was taught, actualize it, then it stops making sense as you had initially envisioned. Yeah, and when you get to the workplace, you are now dealing with numbers, right? And somebody now you have to really understand what do they mean. Yeah. So mirroring that with the skills, I think will help you a lot, to address that gap. Yeah, it will help you a lot to address the gap. Otherwise, you might find yourself that you're very, very much exposed, and people will wonder, what happened. What is your problem? Yeah. So, and just to answer this, because the downing of the reality is, it is expected of you that when you look at those numbers, yeah, I'm able to see a problem. The numbers is the information which you rely on, which is the data, and therefore you're supposed to run an analysis, help us generate an insight, then advise. So that is the reality. It's not just generating numbers. Yes, you have a tool. For example, you have QuickBooks, you have Sage, you have SAP, you have extracted and exported these numbers in Excel, or you have Power BI that is generating insight. So what is the insight saying? Are you able to tell us what is the problem? If I look at those numbers from where you're seated, what does that tell us? Yeah. So now the question now shifts from from what you actually thought to now the question is why and what caused it. So that is what you're trying to solve: the why and what caused this. So you are in the middle of either not knowing what to do, but if your intellectual capacity as well as your skills are built, then you are not going to struggle because you have you have the eye for it. That is one. Two, you have what we call you're trying to bring the analytical as well as the critical thinking. So you're matching these two. So I have to question assumptions, right? I cannot just rely on what I'm only seeing, but I have to know why is that the case. Then I need to come up with a solution. Now I have the numbers. Do I understand the numbers? What is the trend telling me? Then out of that, I try to create what we call a connection, cause, and effect. In layman's language, it's called logical reasoning. And using that to give and help make a certain decision. Now, that is the reality check that comes because somebody's here there. Maybe, for example, you're in a virtual meeting and then they mention your name and you have nothing to say. Yeah, numbers are displayed, but you see, you don't have a comment because first, you don't have that skill set embedded in you. So if that is not embedded, then of course, what you're saying is, of course, we have a problem. So we want to address that gap. Now, there's a lot of things that are shifting. You had me talk about, there's so much that is changing, and businesses even in their own different capacities. Everything is not the norm, right? So the shift is, we are generating report for decision making, and that's why you'll find established institutions have this department called financial analysis and planning, as much as you have finance directors and finance officers, but we have an arm called financial analysis and planning. So why this? Because now business are shifting from, it's not just mere reporting. We want to make decisions. We want to use insights to give a projection of the next 2, 3, 4, 5 years to ensure that the business remains sustainable. And therefore, we can only do this by relying on numbers and analyzing these numbers and help plan to meet the overall strategy of the business. Yeah, so this has to be the shift, and most business are shifting in that dimension. So you cannot remain behind because it's like a flood. When flood comes, it brings along everything. So it's either you're swept with the flood and flow with the water, or you're hanging somewhere. Those are the options available. Either you go to a high altitude or you're swept. But for how long are you going to be hanging on that high altitude? Maybe that's a question that you can ask yourself. So as I'm winding down, uh, what are some of the key insights that we can, in terms of building capacity for this? Of course, we are saying that data does not create values, insight does. So the value that we are creating is by doing what you call the data interpretation. I think I've repeated this time and again, and I'm not tired to give a repetition. This basically means that we need to understand the numbers, we need to know what the trends say, we need to know what the trends mean, and therefore you're building capacity to have an insight of what the numbers mean and the implications of, if this is the case, then this is the risk. If this is the case, then this is the opportunity, and therefore you're better placed to give an advice. So if that is not the case, then generally there's an exposure that is there. So what are some of the action points? Of course, you've talked about being or having the capacity built to ensure that we are relevantly interpreting reports. You are asking questions. You've had me mention that we are now shifting from the general thing and coming to the questions of asking, so if I ask why, right, the why should be followed by what caused this. So we are asking why, and then we're also trying to also find out what caused it, and therefore that then sort of helps to further build up on the capacity as much as we're building on the confidence to be able to, of course, use tools that are at our disposal to analyze information, and of course try to solve part of these problems through the insights that we have generated. So that those are some of the action points. So, and as I'm coming down to the closure, of course, if you cannot interpret, what next? Yeah. Are you ready for the real world? And of course, I've been privileged to get access to get to different forums. Some of these forums are spearheaded by ACCA. For those of us who've heard, that is the accounting chartered body that oversees professional accountants globally. And there's always a cause of concern. And when we get to those forums, we get to have discussions surrounding, of course, are we building capacity? Are we understanding what it takes? Just not to only have reports, but what is the framework of what we're reporting, and how does that help the business in terms of making decisions? So, and we have lots of discussions that surround on that. And of course, if you're not so keen, AI is going to be making decisions for us. If you're not so keen, we are going to be replaced with this thing called AI. So what does then that mean? We need to upskill. We need to remain, at the forefront. Otherwise, AI is not something that we should take lightly, because it's really streaming out opportunities and jobs from people. Because if we have a machine that we can ask it question, give it information, and is able to give an analysis. So what is your work? So somebody will ask you, what is your work? So we were trying to use the human intellectual capacity to upbeat the machines. Yeah, and therefore we need to upskill so that we remain relevant. Otherwise, in the next several years to come, that has always been a concern. So is this AI trying to replace what the human can do and try to contribute to different capacity? So we need to upskill, build capacity, so that we are not replaced by what we programmed. You remember, it's somebody who has programmed this. Yeah. So we want to also build capacity to ensure that we are ready for real work. So that is my parting shot. Ensure that we want to, build the capacity, identify the gaps, upskill, and of course tie this to relatable current trends and what is happening in different businesses. I've given an example. Businesses are having a systemic shift from, the accounting finance, which was traditionally known. You have a chief accountant, and then you have the finance officer. Things have changed. Now we have moved to, we have people who are doing finance contracts. What are they looking at? They're using data to, say how to handle financial contracts and things that tied on that. We have FP&A, as I've mentioned, financial analysis and planning, as a sole flagship department. That their work is just to use data to advise the business. This is a risk, and we need to address it. Yeah. So that is the whole scope about this. So I don't know if there's any questions from there, because now that brings me to the end of my presentation, and I want to appreciate you taking time to listen. And of course, I'll now be moving to the comment section just to see if there are any comments that have been put across by any of the members, and then of course I can try to give a response to either. And of course, you are free to ask questions. You can raise your hand, you can type it on the comment section. I'll be sure to pick uh, any of the questions and then of course respond. For those who joined while we had begun, I mentioned that the session is on record, and therefore that generally means that the video will be availed for you to catch up in case there's an area that you missed. The PowerPoint, of course, will be shared across, supported by our team of coordinators. They'll be able to make sure that this gets to your end as well in case you missed out on the introduction part. So from where I'm sitting, I don't have much to add. It's just to just give the urge to see how we can be able to further upskill ourselves and just try to remain relevant, so that we are not beat by this AI thing, because it's a risk. So when you're at work, you're always thinking about what are the chances that I'm going to be replaced in case things come to things and things come to those things. So we always have to remain in front of the trend. The risks are real. Yeah, even the financial institutions and bodies, they're looking at this, and it's not a lighter thing. So so every other day we have to develop the capacities, the skills, to be able to ensure that we are ahead. So that is it from my end. I don't know if there's any questions. Of course, the coordinators will be able to put up everything together, give the the links to the video, where you're gonna get the PowerPoint in case you need to catch up, and of course, in case you have any burning questions, of course, we have those support channels that you can get to, and they'll be able to support you in every step of the journey. For me, it's just appreciating you for taking your precious minutes to join this call, and just to listen to me, and just trying to add value to the subject of our discussion. So I think we can stop at that. If there are no burning questions, thank you so much. From where you're logging in, you're most welcome. I don't know if there's any burning question that it needs to come up. The floor is open. And of course, if there are none, again, appreciatively, you can always reach out to me after even this call later on. Yeah.
Yes, please.
Yes, Anthony.
Yeah, I'm just asking: is this the end of this topic of practical financing, or we are still going to have more after that?
Yeah. We're gonna have more. This is just just sharing the perspective of how the course is and everything about the course, together with any most elements. And what we've just done a brief breakdown. In fact, we have not done anything just yet. Yes. So there's so much and areas to
I,
discuss around this area. Yeah. So we'll be able to expand on most of those areas.
yeah, I think I should have asked the coordinators, but I can still put this one on question. It
Yeah,
would be
sure.
good for us to. I think it is good for us to have a timetable so that we know which course comes on which date and so forth and so forth. Because like this now, we don't know exactly. I've seen on the a lot of being posted. Apart from this practical financing, the other course that is supposed to be going on, if I'm not mistaken. So
Yes.
should we have a timetable so that we know the Monday or Tuesday or which day we have this and that and that?
Yeah, for sure, for sure. Yeah, that's being worked out, and as I've mentioned, that every information is gonna be clear. We will you're gonna get the course outline with a breakdown of all the areas, and of course we're gonna inform you of the schedule for the class as well. Like I said, we're treating these as the first introductory class just to give a perspective and the general view of the course, and of course a build-ups from there will be communicated using our our communication channels that we have. And of course, in case there's any other burning question that will be burning, our communication channels remain open. Feel free to question and ask, and of course you're going to get the support from our team of coordinators. I think from where I sit, I can say with much certainty that that is the case.
Okay, thank you.
You most welcome, Anthony. Any other question? Okay, so if there is none, I want to appreciate you for taking a minute just to listen. Of course, we will further share the information as well as the videos for you to do your recap, and feel free to reach out in case anything is not clear. Thank you so much. Be safe, stay safe, and have a blessed and good night to you all.